May profits be upon you. Welcome to another weekly Forex forecast. We're going to look at pound. All right, we're looking at the pound futures, but understand that we are actually looking at pound USD. Pound USD, because when you trade pound futures on the spot, you are trading against the US dollar. So you are now looking at GBPUSD. Now, we're looking at the monthly time frame. What do you see? Lower low, lower highs, lower low, lower highs, right? That looks like we're in a downtrend, right? This is a bearish market, right? How do you know when the trend is over or when it's ending? What is this signature of price that'll let you know that? Well, you're looking for a break of structure in the opposite direction. That is the indication that the downtrend is over and that a new trend may be beginning. Look closer. What price likes to do, I'm going to say this real quick. All right, what price likes to do is make the low, make the lower high, then the lower low. This is a bearish leg of structure. All right, in a downtrend, what price likes to do is start a retracement and go right back to a fair value gap or a structural point, an order block. I look for fair value gaps for a price to turn around and, all right, stay with me. Here is a bearish fair value gap. Extend that all the way over. Oh, look at that. The price turned around. So the lower low is only bullish for one reason, to make a lower high. Now we have a lower low being made. It broke that low. All right. You know that we are still bearish. I'm looking for what in this bearish leg of structure? I'm looking for price, an area where price will turn around. Well, this looks like a likely place. That looks like a fair value gap, right? Let's follow the line. There's one here too. All right. Let's follow the lines all the way over. See, look at that line. Oh, there's a bearish fair value gap there. All right. See that opposing candle? All right. Sorry. This opposing candle, you want to see price hit those opposing candles. You want to see price hit those fair value gaps and turn around the other way. And that's what happened here. But check this out. Fair value gap that it was supposed to turn around, where it should have made a lower high, was right here. But it came up kind of short here, didn't it? It didn't break this swing low. If it would have broke that swing low, that is a break of structure. That will indicate that the pullback is over. The pullback is not over, obviously. Why is that? Maybe because we're going the other way. Maybe we're seeing that price is going to change direction. All right. And this high was traded through. When I say traded through, I mean it didn't just wick up and then, continue the other way. It didn't wick through, it traded through and closed above that high. That indicates that this pullback is not over, and that we may, because it broke that structure and closed above it, broke that what should have been a lower high, excuse me, we've made a higher high. All right. And this could indicate that price is going to go to the high point. I hope I explained that. I hope I explained that clear enough. And I'm bullish. I have bullish thoughts anyway, bullish, pleasant thoughts. All right. That price is heading higher. Now, if we look at the weekly, this is where things start to get a little clearer. See that you see how important that structure point is, right? And then we have this number, prices trading through these highs, all right, and making higher highs. All right, look at that close above this important high where there's nothing but liquidity. All right, price comes out, takes that liquidity and trades through it and closes above that high. That's a bullish indicator to me. All right, and what am I looking for? Once price breaks highs, we look for that pullback to start. Well, you can see that you can, why are you doing this? Come on. Oh my God, why? All right. You can see that this pullback is probably starting. All right. We had a pullback into a beautiful pullback after price takes out this high, took this high out. We did have give a pullback into this bullish fair value gap here, and it used it to go higher. Now we're coming back. All right. We're coming back to the area where price broke out from. We tested it already. That makes me a little nervous. It makes me think that price wants to take out that low. All right. And that might be the plan. All right. But what I want to show you is if we use the Fibonacci retracement tool and we go from the most recent swing high. Can I get this thing to work right one time, please? From the most recent swing high to that high, we can see prices coming back into a from premium to discount. You want to take your longs from discount. You want to take your shorts from premium. This is a major swing because it has fractal swing lows or fractal lows on either side of it. This is a major one. All right. These are intermediate. And from that low to that high, if this is where uh, the pullback starts, we could see price pull back to the discount area right here. We could see that. That's not what I want to see. But we could, if we go past that low, if price closes past that low, which is this high, if we go past that low, there's a good chance we're coming down here. Okay. And we're going to know that come next week. Let me show you something on the daily. Let me get rid of this. All right. You already know what's there. All right. This is our dealing range right now from this swing low to that swing high on this time frame, daily time frame. All right. We are in a prime area of optimal trade entries. You can see 618, 705, 786. This is the area that I will be looking for the optimal trade entry. You see a price finding its footing here. I am looking for, that's why that arrow's here. I'm looking for price to pull higher. Now, if price forms price has formed a Friday, it formed this doji here, and that allow it to form a bearish value gap. What I want to see, what I'm looking for rather, is price to eat its way through that that fair value gap and find its footing on each one of these Fibonacci retracement levels. All right, find its footing, find its support, and continue higher. So we can see a higher high, higher low, higher high, higher low, higher high. That's what I'd like to see. All right, and I think there's a good chance of that happening because of where we see this price action. All right, sorry. So if this fair value gap holds price, which it's designed to do, and we see lower prices, if I see a close below, what is that? Yeah, 1.3 thousand, another round number. If I see a close below that, then we're probably coming to the fair value gap down here. And this is where, if you're going to be taking shorts, this is where I would take my take profit. All right, if price closed below 1.3 thousand. All right, I'm looking for price to hold here and start to turn up. But I'm going to, I'm just going to let price action dictate what I'm going to do. I'm not going to jump ahead of it. I'm not going to stay married to an idea. I see higher high, higher low, higher high. This could be the formation of a higher low, or it could break this low, and we start heading down towards these lows. I'm not interested in taking shorts until I see price head toward you know, close this, take out this low. I want to take longs, but we have a headwind in front of us, a couple of them actually. If price breaks through this one, I'm thinking it's going to break through this one right after that. So that's where I'm at. I'm hoping that you enjoyed the video. If you did, make sure you hit that like button, give a boost to the video, and help grow this channel. Leave a comment, and I would appreciate it because I love to get feedback from my viewers. And don't forget to subscribe, and I'll see you in the next video.